What is going on, everyone? Welcome back to my channel. Hope everyone is well and has enjoyed the first two videos that I've put out there so far. Now, today I'm going to be speaking about something that was a very big misconception, let's say in the first 3 years of my trading. And that was actually stacking positions because I thought I was right versus actually scaling into profitable and winning ones to maximize my risk reward, obviously. Now, the difference between stacking and scaling, in my personal opinion, is purely down to risk. Right? Everybody goes through those peaks and those troughs in our emotional little cycle that we go through, and we often feel enticed to add more risk for two reasons. Either we want to get out of a little hole that we're in and we feel that this trade that we're in right now is the best trade that we've been in and this is the trade to get us out of our issues, or we've been in a winning streak, right? And we all know that this can happen, that your ego and your confidence gets inflated slightly. Now, the issue with stacking is people forget about the risk. And that's the truth, right? Everyone thinks if they add positions on right now that this is going to be the best trade they've ever had, right? And they only think about the gains that it's going to bring you, but subconsciously, no one ever factors in that risk. Now, stacking and scaling in is probably, in my personal opinion, the biggest cause of detriment to someone's account. So versus scaling into positions is having fixed risk regardless of where you are. Actually adding to a position if you have ammo left, which is something I'm going to show you on the charts when I share my screen. Now that is obviously just to give yourself a better risk reward overall. However, factoring in that all those positions that you've added, if they all turn against you, you've calculated that risk. That is fixed risk. Now what I'm going to do is I'm going to go ahead and share my screen, run through a few things, but I hope you enjoyed the video. Cool, so jumping on GJ, there's obviously a trade that I ran through in my last video, just breaking down why I actually took that position from 57.50. Now, the difference between, just to reiterate, the difference between stacking and scaling in would be me throwing on multiple orders on the high, hoping, this is obviously the trade that comes through, I'm looking for 155, right, I'm still holding this. Me obviously waiting for this trade to play out, throwing on multiple orders and expecting this to just go in my favor versus a more disciplined and fixed strategy where you're actually scaling into winning positions. Now, what that means is, and I'm going to run through this just briefly once again, my overall view on this was short and still is, right, for the time being. Nothing has changed just yet, but looking at this, we've had a nice little 3-pin pattern into the high. 1, 2, 3 out of 157, right? We know we have that very bullish monthly closure, but it's not about what it is, it's about where it is. These are crucial highs for the pair. Now, we've obviously had that daily reversal, and something there again, what I want to show everyone is that people stack at the wrong time, right? People stack at the wrong time. That's why stacking, in my personal opinion, is deemed discretionary. And discretion isn't sustainable long term, and you can't actually get consistent that way. Now, looking at this on the daily, the average retail mindset would be to throw on positions once the move has actually started. But notice how once we've cleared all these lows, we always come back for that retest. We had a level of resistance, which was retested as support. Once we broke back below, retested as resistance, right? That being said, if we just drop to the 4-hour and run through PA once again, we obviously had our fib from the high to the low. Once we actually broke structure yet to the downside, 157.50 was our high probability area to actually come back into. That being said, everything moves in impulses, everything has corrections. So we had that correction we had that impulse to the downside, excuse me, and we had that correction to give us then another chance to enter. Guess what? Straight into 157. Nice little round psych level as well. Looking at this on the hourly, just to get my point across on this to everyone, is the fact that things move in waves, right? This fib target hasn't been achieved yet and will more than likely be achieved. However, how you do want to possibly add to your risk rewards is using a fib again. So understanding that this impulsive move cleared out 2 previous higher low swings and made that new low. So what you can do is take your fib from the high to the low. So now we have a fib within a fib, right? And notice that the market is going to correct. Notice that this is partially an inside bar move. Let me get my rectangle. An inside bar move is an impulsive move, to the downside, where the market tends to consolidate thereafter. So we had that impulsive drop to the downside. It's probably that on a 4 hour. There we go. So an inside bar from the high to the low. Let's keep that there. From the high to the low, we had that move, and we've been trapped in that range ever since. So essentially what you can do as well, if you're thinking outside the box, is fib that impulsive move from the high to the low. And guess what? We're within our range. We're within our means to add to this position. The only time you should add to a position, and I'm going to reiterate this, is if you're scaling into the position and if there has been an impulsive move in your direction with the higher time frames in your favor and the risk reward lines up. It's worth the risk. This mindset of just adding positions is not sustainable long term. But there again, what I am going to do is bring more of these examples and just show you live price action and what I do for myself to manage my positions. I personally didn't take this scale in, but what I will be looking to do is possibly get something in at 156.750 to then ride this back to 155. Cool, I hope you enjoyed it in the chart. So what I am going to reiterate is the only way one can sustain consistency in this game is by having fixed risk and by removing discretion. What I mean by discretion is adding trades, adding higher risk just based on how it feels, right? What you need to do is have fixed risks. The market's forever changing. So by having fixed risk, you can obviously be consistent, be disciplined, and stick to your plan. That is one of the only ways. So what I am going to do is I'm going to add my WhatsApp link somewhere over here, my WhatsApp number. Drop me a message if you have any questions on this. And I'm honestly just going to be getting back to everyone, helping everyone. And feel free to send me some charts, some examples of where you have possibly stacked, where you could have scaled in, or you have scaled in, but you stacked too, and that's caused some losses. So drop me a message. I'd love to hear from you, but feel free to share this video, like, comment, share, subscribe, and yeah, I'll see you guys on the next video. Take care.